It's been a while since I've read anything from Sovereign Man. Like I said, I subscribe to his little, the free emails. He does have, I think, a paid service or something. And he's got pretty good content, but I've just always stuck with the free stuff. I don't know. I just never felt like going a step further. I just didn't feel like I need to. Because, we offer investment advice and things, and I think from what I understand, he does a pretty good job with that stuff, but not crypto stuff. He's more like, invest in stuff outside the United States and this and that. And anyways, we had an interesting little thing to say. You know what I mean? Today. Europe's leading economic policymakers have officially thrown in the towel. Last week, the European Central Bank admitted economic conditions are so dire that it already has to reverse its monetary policy. I'll get back to that in a minute. Following the great financial crisis in 2008, central banks printed trillions of dollars and pushed interest rates to their lowest levels in human history. Low interest rates and lots of new money sloshing around the system mean people should go out and buy things that would otherwise be out of reach. New houses, new cars, businesses, etc. And cars, I keep talking about this, cars. You go in a dealership now, where do you need what kind of a monthly payment can you afford? I'm sorry, how much is the effing car? What kind of payment can you afford? I could probably do $400 a month. Okay. We can put you in probably any car out here. Really? Even that one? Oh yeah. $71,000 brand new F-250 lifted truck? Yeah. $400 a month? Well, we can put you in a 10-year loan. Didn't 5-year loans used to be normal? We can do 10-year now. And remember what happened in turn of the century? Big, well, not necessarily the turn of the century, but 1913 is pretty close. Federal Reserve is created. Completely fraudulent piece of crap. Prints our money. We have to borrow money from it. We can't just print our own. We got to borrow money from it. 3 years later, 1916, the income tax laws passed. Now we got to steal money from Americans to pay the interest on this money we have to print from this private company known as the Federal Reserve. Yeah, it's private. You didn't already know that. 1929, massive stock market crash. All right, president comes out. All right, everybody listen up. I could see like if it was Barack back in the day. All right, hold on. Sir, nobody's even talking. My teleprompter turned off. I got to make time. Oh, go ahead, sir. Hold up. Yeah. All right, we'll get to that. Yeah. We don't want you all to get kicked out of your houses because we have nowhere to put you. But the banks want their money back that you owe. They've called in the loans because they could call in loans back then. And we know you don't have the money, and the crisis is so bad that everyone's losing their jobs. So we're going to, instead of take your little 5 or 10 year mortgage you're used to having, we're going to extend it 30 years. So your payments come way down, and at least if one or two people in a couple people in your family are working while the rest are not working, and other people have to move in with you because one or two people would at least have a job out of 20 people. Between those, you could pay your mortgage, and we'll have the little food stamp lady, it was called something different, come by your house and give you enough. Okay, you got 20 people here. All right, here's your food card or tickets, and you can go to the food line and get your stuff. So they extended what was a 5 to 10 year mortgage normally, and back then when it was 5 and 10 years, they would typically make you put 50% down on the house or land or whatever. We're going to extend it 30 years. Let me ask you a question. Did that 30-year mortgage go away? No. No, it didn't. It's here for good. And most people can barely afford, again, what payments can you afford on a house? Well, I make this much money. Okay, well, you can afford this kind of house. I can't afford that house? The one we wanted? Wow, okay. What can I afford? Well, 2 streets from the ghetto, there's some decent houses over there. Built in the early 1900s, haven't been fixed up since. You can afford those, right? So you have to do whatever you can do, even with a 30-year mortgage. It used to be 5 and 10 years. No, 30 years now. And it's stuck for good. And now all the housing prices reflect that. Oh, don't worry about it. Houses should not be $200,000, $300,000, $400,000. Can we get real? So what have they done with the cars? 5-year, 6-year, 7-year, 8-year, and even in some cases, 9 and 10-year loans. I don't think that's going away anytime soon. It'll be the new thing. Get a 30-year mortgage, keep doing that whole thing. Maybe they'll have to bump that up to 40 years. and then 10-year car loan. So you're married to these things for the rest of your life. Anyways, following the great financial crisis in 2008, central banks printed trillions of dollars and pushed interest rates to their lowest levels in human history. Low interest rates and lots of new money sloshing around the system mean people should go out and buy things that they would not normally be able to afford. They'd be out of reach. New houses, cars, businesses, etc. And in theory, all of that activity creates jobs and helps the economy grow. Well, in theory. 10 years into this monetary experiment, central banks did create growth. U.S. GDP was about 15 trillion in 2008. Currently, it's 22 trillion. That's 7 trillion of economic growth. Impressive, until you figure out the cost of that growth. Over the same period, the U.S. national debt increased from 10 trillion to 22 trillion. So it took 12 trillion of debt to create 7 trillion in economic growth. The marginal utility of all this new debt is decreasing. Remember this point for later. The marginal utility of all this new debt is decreasing. And that's the same story all over the world. The U.S. economy is so dependent on cheap money, it can't even handle 2% interest rates. The Fed hiked rates from 2.25 to 2.5 last December, and stocks fell 20%. But Europe is even worse. Europe has negative interest rates. And the European economy is so weak, it grew by 0.2% in quarter four, by the way. It can't even handle 0% interest rates. Last week, the ECB, European Central Bank, announced it would keep interest rates negative. And it's starting its third round of cheap loans to banks, who in turn are supposed to lend to businesses and households. And of course, those cheap loans to banks, they're not giving you a cheap loan. Now, on paper, I got a 4% loan. Well, they got it for 1% or whatever it is, right? So they get to get it from the government, and then they just, why do we need a bill? The government, give me a 1% loan. Let me have a 1% loan. So that when I look at my mortgage statement after many months or a year, whatever the hell it is, it says you've paid $15,000 so far in interest payments to this effing bank. Your principal, you've paid less than half. Maybe $6,000, $7,000. So it's costing me that much just this far. And a few, like when I looked at it, it was a few years into the year or whatever. Wow. Again, middleman bank gets to take $15,000 from me. That's not the full year. That's just part of the year. While I'm paying down $6,000, $7,000 of it. But if I had a nice 1% interest rate, those numbers might actually be reversed. Where my principal could be $15,000 and the interest could be $6,000, which is still like, wow, $6,000 to borrow this money. Well, how else do you pay for something? How else do you pay for a house? Anyone got $3, $4, $5, whatever, $100,000 laying around? No, and they know you don't. You're not supposed to. You're not supposed to earn that kind of money. We need you to go get these loans. And when you need a car to get to and from work to pay that big house bill, we're going to put you in a 10-year loan. And when you're dying, as my wife would say, dying to death, she said that one time. Oh my gosh, no, we can't do that. It'll die to death. Like some little lizard or something. Evelyn, what? How does something die to death? It's already, if it died, it's dead. To death? What? Oh yeah. My wife got some funny things, sayings and song lyrics that she thought a song would say, And then when you're died to death of all this debt, working every single day, can't do anything I want to do. Well, you got a 1 week vacation. Make sure, don't call in sick too much. You start using up that vacation. Well, damn it, I need a toy. I need a jet ski. I need something to play with, man. I gotta have fun. I can't, And you justify it easily in your mind, but I can't afford it. I don't have that cash. I'm paying a big house payment, big car payment, 10 years. Well, no, it's not big. It's not a big payment. $400 a month because you got your big bad boy $71,000 F-250. So I could just show everyone I got an F-250. I'm a part of the American dream. Do you own it? No. Do you own it? No. Do you own it? No. Do you own that car? No. So none of you actually own anything. No. I mean, it says on this piece of paper, I'm the owner, just like my house says I'm the owner, but I'm not really the owner. Not until this sucker's paid off. Oh, and then if you don't pay your property taxes, you find out there's an interesting loophole, so to speak. Someone else gets to own your home. It's called the government for really cheap. Yeah, but I fell on hard times. And, the banksters effed us again. I lost my job. Sorry, you owe the taxes. We have the right to sell your house to collect our taxes. The Eurozone, well, where were we? No, last week the ECB announced it would keep interest rates negative, and it's starting its third round of cheap loans to banks, who in turn are supposed to lend to businesses and households. The bank also cut its growth forecast from 1.7%, which is already pretty bad, down to 1.1%. The Eurozone is the third largest economy in the world, and 10 years after the GFC, it can't keep the machine running unless interest rates are negative, and it continues to dole out cheap cash to banks. This is a pretty big deal, and it's the clearest sign yet of what's to come. There is trouble ahead. Remember, song was kind of coming in. That's what the pause was for. The little song was coming in. I didn't feel like I wanted to do it. But if you're wondering what it was, trouble ahead. Yesterday, all my troubles seemed so far away. That's what came in, but I'm just not gonna do it. But since I mentioned it, what were we gonna do? So I'll go ahead and just tell you what I was gonna do, but I'm not gonna do it now. That would ruin it. Remember, the marginal utility of the money being printed by central banks around the world is plummeting. Each dollar they print produces less and less economic activity. For example, U.S. only added 20,000 jobs in February, a far cry from the expected 181,000 jobs, but they persist. The ECB is all in on negative interest rates and easing. Canada recently warned its economy was weaker than realized. Yeah, it's because we said the trade deals haven't been fair to us, the whole world. We're going to not make them fair to us. We're not asking for more, not less, just even. So now the whole world is going to have this issue. Lower their interest rates, go negative. Canada, that's why. And I feel bad for them. I don't want to see that. But fair is fair. And even though it's fair is fair, and our trade deals, we're still in debt up to our ears. And it'll never get paid off in this country. We're in the same boat, basically, is what I'm telling you. ECB is all in on negative interest rates and easing. Canada recently warned its economy is weaker than realized. The U.S. halted its rate hikes and may reverse course. Interest rates are negative in Japan and standing pat. There are currently $9.7 trillion of negative yielding bonds in the world, up 21% from October 2018 through January. I'd bet we'll soon see the total number of negative yielding bonds in the world surpass the 2016 high of $12 trillion. When you're in a world with trillions of dollars of negative yielding debt, nothing really makes sense. Interest rates are the price of money. And when the price is negative, what does that say about the world? One of the best things to do in this economic environment is to own real assets, whether it's shares of a thriving business, precious metals, or other commodities. And I'll add one. Guess what I'm going to say? Crypto. Manipulated or not, at some point, I think, like gold and silver, at some point, go up big time. For gold, you can either buy gold bullion or collectibles, and our friend Van Simmons says $20 gold pieces are one of the best deals in the market today. Collectible coins usually trade a big premium to the spot price of gold, but you can buy these coins for about the same price, even though the premium over spot has been as high as $1,700. So you get exposure to gold and all that potential upside. We wrote about it in notes here, so little plug for him, I guess, right there. But exposure to other commodities like copper, uranium, silver, etc. also makes sense. I'm recording a podcast today with one of the best resource investors out there. I'll send it out this week, but he'll share some of his favorite ways to invest in the beaten down resource market. We're about to see a world with a whole lot more negative yielding debt. You should position yourself accordingly into your freedom. Signed, Simon Black, founder, sovereignman.com. See, it's stuff like that where I say you can't argue with that. You can't argue with those numbers. But, whoa, Joe's American stock market crashes again. Mama said, long as Trump in office, ain't gonna be no big market crash. And Q had said, oh, don't worry, we know the Fed's gonna keep raising rates right around March of next year. Don't worry, we've got a counter for that. Because they know that'll get the economy in the wrong direction quicker, to make it look bad for Trump, just in time for the 2020 elections for him to lose because of the horrible turn in the economy. And isn't it funny? We're in March, and we did in fact hear we're going to back off. We are going to back off. We're not going to raise the rates. Boy, that old Q seems to know some things in advance, doesn't he? Or she? And on that note, maybe time for a video update. Maybe I'll do that one next. Take care.